Okay, I am going to try this again, you guys. I told you this is my first time going to live, and I needed you to be gentle. So anybody that was in the first live, I apologize, but I'm going to get it together, okay? I am going to rehash a few things. I am Dominique, founder of Domino Effects Group, alternative lending platform for underserved small businesses, along with the community, the Domino Effect. So I specialize in helping small businesses not just get capital to grow, but to sustain it, right? So we know that women and minority-owned businesses are starting businesses at an alarming rate, especially women, right? Especially Black women. Now, this is great, and I'm delighted to hear this. I'm part of the movement, right? But, you know, the challenge becomes getting the capital to sustain, right? So sustain, to grow, that's a big piece of that. A big piece of that is getting access to capital. And so, you guys, today I want to spend my first live talking to you about how to navigate online loans. And like I said, if I'm looking up and down, it's because I'm also recording down here. So keep it, just bear with me and stay tuned, because with what I'm recording has slides. So if you want a copy of the slides, then you can just send me a DM with your email and I'll just send it over to you. But you know, this is my first live, like I said, so be gentle. But as we move along and do more of these, I will get better. And I'm sure you'll give me tips to help me get better as well. But when I have a meeting, I like to go into it with purpose, and I like to leave with direction. So I know that your time is valuable, so is mine. So let's get started. I don't want to waste it. I want to start with ownership, right? Ownership is a way to success. We know this now. If you want to get in the game, if you start a business, you need to raise your credit score, lower your debt. If you want to stop wasting your time spinning in circles like I did, or getting declined at the bank, stop messing up your credit, or running into or accepting predatory loans, right? Then you need to, join these classes, get with another group, get with a community, but get with a group like ours, right? Because we have experienced business capital experts and advisors that will walk you through all of this, walk you through the process, right? And so, I mean, you guys, if we can just take a look at the numbers, right, and just see where you stand currently, then that's a great starting point. I mean, if it works out in your favor, that's great. If not, then at least you have the correct information of where you need to pivot and what steps you need to do next in order to get the funding that you need. And so for me, I'm playing a totally different game, right? I know that 2024 is about opportunity. I know this for a fact. And so I'm getting on, the game for us is getting in on the opportunity. I want you guys to get on the opportunity as well, but part of that is education. So I want to share that journey with you and those resources with you. So first off, the first thing I always ask my clients and customers that I work with is, have you been to the bank? That is the very first question that I ask. It is really, really important, because if you can get funding from the bank, then you should. They're going to give you the best rates and the best terms. If you can get it, that's where you should go. And the best time to get a line of credit or to get funding or to even approach lending is when you don't need it, right? So when you don't need it, that's when you're most attractive to the bank or to the lender. And so that's what we're going to be discussing. And so I want to delve into defining the different types of online loans, okay? So, as a business owner, there's going to be a point that you're going to wonder, okay, what's going to be the best option, right? What's going to be the best loan option? Or if you're looking for equity, right? But that's another discussion that we will have on a different day. Today we're talking about just online loans. And so there's many different types, so you need to know the different types, okay? We have lines of credit, microloans, you have SBA loans, we have crowdfunding, you have grants, you have equipment financing. There's a lot out there. So with so many options, it's really good to define what each one is so that you know what you're looking at, right? So let's go into a few of these. So line of credit. A line of credit is a financing from the bank. it really provides you like a financial safety net. You know, it helps with seasonal businesses. It's you're taking out the interest on what you borrow. So basically, it's a really good source for payroll. If you're, it's a good alternative, right? When you're looking for funds to cover expenses, right, outside of like your peak season. So a short-term loan, it gives you a short repayment schedule, and also with some of these you may have higher fees, right? Some short-term loan companies will charge factor rates instead of interest rates, and the factor rate is a percentage. So it's usually expressed in a decimal format, and you multiply that by your borrowing amount. And so we will obviously walk you through all of that and each step, right? Then you also have merchant cash advances, MCA loans. It's not really considered a loan so much as an advance on your business's future earnings. So looking at your business revenue, you pay a percentage of your daily sales. So sometimes these are looking at like, you're looking at like a daily repayment or a weekly repayment. Sometimes you can get monthly, but typically you're going to be looking at like a weekly payment or a daily payment. And so these are available for businesses that have, like, you see these a lot with businesses that have, if you have bad credit, you know, they offer these a lot. So we have also microloans. Now these are really great. This resource is great. So CDFIs and nonprofits offer microloans. You need to get in with your community, look at the resources that are available to you, because they should have a CDFI in your city. A CDFI is a community development financial institution, and they offer microloans. I mean, it's amazing, and this can range often from a few hundred dollars to, you know, thousands of dollars. And they are, you know, nonprofits also are involved with these as well, but they really work with underserved businesses. So women-owned businesses, minority-owned businesses, businesses in distressed areas, they really work with you. And here's a really cool thing about CDFIs too. They do have programs for startups. So if you're a startup and you have experience in your industry, right, and you have a way to prove that you can support your lifestyle, your daily living, plus the loan, then it's another great option for you. So CDFIs are just a really, really, really great option. And they, like I said, they focus on underserved businesses. So women-owned businesses, veteran-owned businesses, LGBTQ. You know, if this is you, then you need to find your local CDFI. If you're in Sacramento, you can reach out to me, and I'll send you all of the information and who you need to talk to at the CDFI. In Sacramento, we have, I think it's California Capital. Don't quote me on that, but I will look it up for you. Also, let's talk about the SBA. SBA, we have SBA backed bank loans. So these are high quality loans, low interest rates, but they can be challenging. We have great SBA resources, right? You need to have 2 years in business, good credit, but be prepared to put 10% down. Okay, remember that resources like the SBA, resources like Minority Business Development Center, the Women Business Development Center, these resources are for you. I mean, you need to utilize them. These are where your tax dollars are going, right? You get free business advisors, you get help with your accounting, you get help with your business plans. And if you are going to go and apply at a CDFI, you want to have a business plan. So they will help you with getting your business plans together. So, I mean, this is just really gold, you guys, if you're looking for, you know, assistance and really serious about getting funding for your business. So, let's just take an example. Okay. So we'll take an example of Sarah. So Sarah has a photography business, and she, you know, she's in the tri-state area. She's in Ohio, Kentucky, Indiana, right? And she does amazing events, and right, amazing photography, natural lighting, and her clients she just captures emotion in every single shot, right? So her customers love what she does, but the way that she's set up is she offers packages, right? So this can be a challenge when there's, you know, a lean season, during the off season. So what she's looking at, what's she going to do in her situation, right? So she's looking at, should she get a traditional financing, or what other resources are out there. So we're going to look at traditional loans for Sarah. Okay, so let's start with traditional loans. So these are provided by, banks, credit unions, CDFIs, right? They have lower interest rates, longer repayment terms, compared to alternative loans, right? So they offer options like term loans, lines of credit, but they are difficult to qualify for. So 80 to 90% of businesses can't qualify for these loans, especially right now. If you're watching the news, you know about what's going on with the banking industry, and approval rates are getting harder and harder at traditional bank loans, and they're just tightening up. So they're tightening up right now, and where does that leave underserved small businesses? Well, when it was harder before to get funded, now it's even harder. So, but like I said, there are other resources like CDFIs and online lenders. But, CDFIs have a lot of really, 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 really great benefits, like I mentioned before, but I said the two main requirements, right? Especially if you're a startup going for a CDFI, experience, and if you can show that you can produce enough outside income as well to substantiate the loan. But they have more lenient requirements as well. So we know that access to resources, especially for underserved groups, is difficult. It's difficult to first get your foot in. So we need to be taking advantage of this. So there's more lenient requirements on these type of loans. They're looking at less consideration of how long you've been in business, and it's a great alternative if you've been to the bank and you've been denied, right? Now let's look at the other types of financing that Sarah, who's in our example, right, can look at. So she can look at business credit. Business credit is a great resource. Now I am building my business credit as well, right? So when I started my business, I did not start with building my business credit. If I could go back and start over, that's one of the things that I would also include in one of the first steps that as I started. So working on your personal credit is super important to tackle that in the beginning, and then build your business credit. So if you need resources for business credit, we have great resources that we can send to you. Just send me a message and then I'll provide you the link as well. But with business credit, you can use it to pay for your business expenses, okay? So if you qualify for business credit, many cards can have 0%, for your first year, and you can earn cash back on some of your business purchases. But in my experience, it was easier to get business credit before, but you do need a personal guarantee if your business is not already producing cash flow. So be aware of that. Also be aware that building business credit does not happen just overnight. For most people, it will take some time. So just be prepared to know that this is not a shortcut that you can take. Now, also there are things like crowdfunding. Okay, so crowdfunding platforms are where businesses raise capital from your family, your friends, your peers online in exchange for equity, interest, or rewards or other things. And we also have resources for crowdfunding as well. But then you have things like invoice factoring,